"The opportunities are enormous," said Cathie Wood as she explained the ambitions for ARK's new VC fund. On a separate site for the ARK fund, Cathie and her team have revealed the first 5 trades in the venture fund, all of which are private firms. To know which they are, stay with us till the end. Hello and welcome back to our channel. The title for today's video is Everyone's Lying: Huge Opportunity in Financial History with the Views of Cathie Wood, an American Investor. Before we begin, make sure that you subscribe to our channel. The goals for ARK's new venture capital fund. Wood debuted her ARK Venture Fund Tuesday through an exclusive collaboration with Titan, a VC-backed retail investment application, Andreessen Horowitz, and intends to raise $500 million. The new strategy, ARK Invest's most initial interval fund, will be a departure for Cathie, who created her name by selecting public companies for active ETFs. It also represents a new push for the company into the private markets. The $7.2 billion ARK Innovation ETF, or ARKK, the company's flagship, has underperformed for a time before the launch, down more than 50% year-to-date and going through outflows of over $800 million. It also comes after adjustments to the ARK workforce when Wood cut 2 smaller index funds, elevated the number of analysts, and tried to hire more. Despite these difficulties, Wood maintained a positive attitude in an interview Tuesday with CityWire. She made several references to the beginning of ARK and cast the opening of the venture fund as a sort of new beginning for her business. Cathie said that they had experienced a horrific bear market. They think they're getting near to the bottom of it, and they wish to go on the offense as they believe that the chances are so big. She explained that the staffing adjustments were not limited to this product only. It was for the whole firm and were a means of growing the organization to scale. Fees and flow. When asked how much money the fund planned to raise, Wood pointed out that Andreessen Horowitz, an ambitious VC company that has invested in several digital firms and has $35 billion in assets, funds Titan. "I'm aware of their lofty expectations," Wood stated. "They hope to reach $500 million within the first few years. Provided this is a relatively new product, it would be fantastic if we could achieve that." The new fund will charge substantially greater fees than existing funds employing this structure, while having a smaller minimum than typical interval funds at just $500. Fixed income is making progress in ESG as ETFs experience significant AUM growth. ETFs are seeing massive inflows due to the rising demand for ESG fixed income exposure. The explosive asset rise for ESG bond ETFs appears destined to continue. The strategy has a 2.75% management fee and a maximum 4.22% total expenditure ratio. According to a recent article by CityWire, ARK Venture would become the top 3rd expensive interval fund monitored by Morningstar due to this cost structure, with the highest management fee among its competitors. When asked how the company planned to defend the fund's expense to investors, Wood pointed out that investing in private equity is significantly more expensive and time-consuming than doing so in the public firms that have historically been ARK's purview. She added that the fund would charge much lower fees than most VC funds. She said that they're attempting to be fair. They are attempting to walk before they go for a run as well. Fees can consistently be decreased but never increased. Wood asserted that the fund would be a direct-to-consumer offering by going direct to investors and independent RIAs instead of through wirehouses. The additional fees over and above the management fee will probably have distribution and marketing fees included, according to Cathie. Titan's website claims that its Titan fee is 0%. The $1.8 billion Carlyle Tactical Private Credit Fund is one of the other strategies for which Titan does charge fees. It assesses a 1% fee on net contributions for $10,000. On Titan's webpage, which initially listed ARK's staff size as being more than 650 and the venture fund size as being $1 billion in materials of public marketing, Wood, ARK, and the venture fund are prominently displayed. After CityWire inquired about the figures, Titan said that ARK's headcount should be revised to about 40, but she would not say how much seed money was in the fund. Portfolio picks. On a separate site for the fund of ARK, Cathie with her team have revealed the first 5 trades in the venture fund, all of which are private firms. Freenome, an initial-stage cancer detector researcher. A fledgling supply chain logistics company, Flexport. Epic Games, the famous video game Fortnite developer. A digital wallet firm focused on Africa, Chipper Cash. And Mosaic ML, an AI startup. With a 5 to 10-year investment horizon, the plan would eventually look to make investments in more than 25 private enterprises, as well as about 15 to 30 public corporations. On October 3rd, ARK stated it anticipates disclosing its first holdings and portfolio weights. Making suitable upcoming days. ESG outcomes are receiving more investments from the financial community. Businesses are changing their operations to support a sustainable economy, and ABM AMRO Investment Solutions takes full advantage of the rising ESG market. Thanks for staying throughout. Share your response in the comments below. Like and share the video and hit the bell icon to stay tuned. See you next time.